Imagine walking through the heart of New York City in the late 1700s. There are no giant skyscrapers, no flashing digital stock tickers, and certainly no millions of investors trading with a single tap on their phones. Instead, a small group of merchants gathers beneath a large buttonwood tree on Wall Street. They have one simple goal: to create a safer and more organized way to trade stocks and bonds. Little did they know, this small meeting would eventually grow into the most powerful stock exchange in the world, the New York Stock Exchange, or NYSE. The story begins on May 17, 1792. 24 stockbrokers signed a historic agreement known as the Buttonwood Agreement. Before this, stock trading was often chaotic. Brokers competed aggressively, prices varied wildly, and there were few rules. The agreement changed everything by establishing a formal system where members agreed to trade securities only with each other while charging a standard commission. It marked the birth of what would later become the New York Stock Exchange. During its early years, the exchange traded only a handful of securities, including government bonds and shares of the First Bank of the United States. Trading took place outdoors before eventually moving into rented rooms as business expanded. As America's economy grew, so did the exchange. The 1800s brought massive industrial growth. Railroads stretched across the country, factories produced goods on an unprecedented scale, and new companies needed money to expand. The NYSE became the perfect place for businesses to raise capital by selling shares to investors. Companies involved in railroads, steel, oil, and manufacturing quickly became some of the biggest names listed on the exchange. In 1867, another major innovation transformed trading forever. Edward Callahan invented the stock ticker. For the first time, investors across the country could receive near real-time stock prices through telegraph lines. This technology dramatically increased transparency and connected financial markets like never before. By the early 1900s, the New York Stock Exchange had become the financial heart of the United States. In 1903, it moved into its famous building at 11 Wall Street, featuring its iconic marble columns that still symbolize American finance today. However, success also brought challenges. In 1929, one of the darkest moments in financial history unfolded. After years of speculation, stock prices collapsed in what became known as the Wall Street crash. Investors lost fortunes almost overnight, and the crash helped trigger the Great Depression. Millions of people lost jobs, businesses failed, and confidence in the financial system disappeared. The disaster forced governments to introduce stronger regulations. In 1934, the U.S. Securities and Exchange Commission, or SEC, was created to oversee financial markets, protect investors, and ensure companies provided accurate financial information. These reforms restored trust and made the stock market safer for future generations. After World War II, America's economy experienced tremendous growth. Household names like Coca-Cola, IBM, General Motors, and later companies such as McDonald's and Walmart became major NYSE-listed corporations. Millions of ordinary Americans began investing through retirement accounts and mutual funds, making stock ownership more common than ever before. For decades, trading on the NYSE looked exactly as many people imagine it today. Traders wearing colorful jackets stood shoulder to shoulder on the trading floor, shouting orders and using hand signals in a system called open outcry. It was loud, fast, and incredibly competitive. Every trade depended on human interaction. But technology once again changed everything. Starting in the 1980s and accelerating through the 1990s and 2000s, computers gradually replaced much of the traditional trading process. Electronic trading allowed orders to be executed within milliseconds, making markets faster and more efficient. Although the famous trading floor still exists, most transactions today happen electronically. Another milestone arrived in 2007 when the New York Stock Exchange merged with Euronext, creating the world's first transatlantic stock exchange.
Years later, it became part of Intercontinental Exchange, commonly known as ICE, further expanding its global influence. Today, the NYSE is home to many of the world's largest and most valuable companies. Giants like Apple, Coca-Cola, JP Morgan Chase, ExxonMobil, and many others have chosen to list their shares there. Together, companies listed on the NYSE are worth tens of trillions of dollars, making it the largest stock exchange in the world by total market capitalization. Even with modern technology, ringing the opening bell and closing bell at the NYSE remains one of the most recognized traditions in global finance. Companies celebrate major milestones, world leaders visit, and successful businesses proudly mark their achievements by ringing the famous bell. From a simple agreement signed beneath a tree in 1792 to a global financial powerhouse influencing markets across every continent, the history of the New York Stock Exchange is more than just a story of a stock market. It is the story of innovation, economic growth, financial crises, resilience, and the evolution of modern capitalism. Every trading day, millions of investors around the world watch the NYSE, proving that a small meeting under a buttonwood tree changed the course of financial history.